it's about 40,000 a coin.
Mm-hmm.
How does Joe Schmo, my yard guy, who's making 15 an hour, how does he afford a coin? Hello, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And there's a lot of good news and bad news out there. And as a friend to the Rich Dad family, here's Robert Breedlove. And me being an old guy, I've got to go to the young guys as what's going on with money these days. So we're going to talk about Robert Breedlove's favorite subject. Well, one of his favorite subjects is money or crypto or the finance or the treasury and what's going on in the whole money show. It's a big show. Well, Robert, welcome to the Rich Dad Show again.
Robert, thank you for having me. It is wonderful to be back.
Yeah, good to have you. And where are you located right now?
I'm in Miami, Florida.
Okay. What did you move there? Is there a reason you're there or you always been there?
Just moving here, and I'm setting up a new studio for the podcast. So it's a good international city, good place to have guests, and trying to do a lot more of these things in person.
Yeah, good for you. Good for you. Yeah. And then please give us your background, because you do have what should we say, a traditional background in the subject of money.
Yeah, somewhat traditional. I have a master's degree in accounting and finance. I was in public accounting initially after college, focused mostly on entrepreneurial services. So we're figuring out how to save rich people money, basically, through tax optimization strategies. And then I shifted out of public accounting and spent most of my career in a CFO capacity, mostly in the technology sector. So I'm a lifelong nerd, always been an avid reader. Became really fascinated with the subject of money after reading The Creature from Jekyll Island when I was 20 years old, which opened my eyes to the problems with central banking, and discovered Bitcoin 2014, but didn't really start to get it until 2017, 2018. And since then, I've been going down the Bitcoin rabbit hole, and most recently hosting the What is Money show, trying to educate people on the nature of money.
So Robert and I talk about his favorite subject, which is Bitcoin. I like Bitcoin too. I just don't have that many. I watched it go from 0 to 60, and I forget his name, but he's a Max Kaiser. He was screaming and yelling about it. Okay, what the hell is this guy quacking about? So it hit 20, then it retraced down to like 0 or something. So it's gone, and then Bitcoin came creeping back. So when it hit 6,000. It had momentum behind it, as a technical trader would say. So I loaded up at 6,000. So I missed quite a bit of it, but I'm still happy. I got about 70 Bitcoin now, but I'd like to get more, obviously.
Mm-hmm.
So let's talk about Bitcoin, because for a younger generation, we share similar concerns. Is that I read this book here when I was in my 20s, 30s, called The Grunch of Giants by R. Buckminster Fuller. It's an okay book. It's not great. But he said basically what my rich dad was telling me. He says, the banks rip us off. He basically said, our wealth is stolen. So Bucky Fuller, our wealth is stolen via our money. So we're going to work real hard. Then we put our money into savings. That's why if you read Rich Dad, Poor Dad, I said savers were losers. Why would you save money when they're printing it? It made no sense to me.
Mm-hmm.
You know what I mean? And all that stuff. That's why Rich Dad was formed. So what was your cognition, given your professional background in finance and money? What interested you about Bitcoin? What made you take the switch?
Sure. Well, I should first say that in my educational path, you actually receive very little to no education on the nature of money itself. Most mainstream curriculum in universities is premised on Keynesian economics, which, as I know today, is basically a pseudoscience that exists to justify the government's monopolization and printing of money. It's based on an inversion of economics, right? In economic reality, you must produce before you consume. But in Keynesian economics, they say you can spur production by increasing consumption. So that's this whole idea of you can print money to put roofs over people's heads or print money to feed people. It is total nonsense.
So Keynesian basically says we print money, we give people money, and the economy heals itself.
We fix problems by printing money. And when
Right.
you understand that this is the core of the whole matter, and there's a lot of mystique put around this topic. It's one of these strange topics where people like to use big words and advanced financial jargon to try and obfuscate the true nature of money. But quite simply, and I'll try to explain this by way of analogy, printing money is stealing, right? You're just debasing savers. So you're stealing purchasing power from savers, and you're transferring that purchasing power to whoever can access the newly printed money first. This is called the Cantillon
But
Effect.
there's also inflation and taxation,
That's right.
and all that goes on.
So essentially, you could say it like this: you're either stealing through purchasing power loss, so people are paying for this in the form of price increases, or even if prices go down, when there's money printed, they're going to have foregone price deflation. Prices should have gone down even further had there not been money printing. So you're either paying for it as price inflation or foregone price deflation. But there's no equitable benefit whatsoever to the printing of money. It is purely a transfer of purchasing power from savers to those who can print money. And
Right.
so a good analogy here might be
Wait,
a
can I say
stock certificate.
one
Please.
second? This whole thing here of true capitalism, prices should be coming down,
Yes.
not going up. Like when a farmer goes out there and plants cabbages, if he produces a lot of cabbage, the price of the cabbage comes down, not up.
Of course.
So every time I see inflation and people going on, oh, they blame the capitalists, it's really not the capitalists
No.
who are the problem. It's the Marxist. So
It is, yes. Yes, it is when you could actually, so central banking, which is the currency counterfeiting cartel that prints all this money and uses the insidious tax of inflation to confiscate people's wealth. This is actually measure number 5 in Marx's 1848 manifesto to the Communist Party. So it's no exaggeration to say that central banking is monetary communism or monetary socialism, to be more general. It's an aggression against the private property of savers. So it's an anti-capitalistic institution to the core. Now, to try and demystify this a little bit, so anyone that's ever owned a stock, right, a public equity or a stock certificate in a company, that stock represents your share of that company's capital, right? So a company has certain plant, equipment, IP, whatever the assets are on the balance sheet of that company, net of the liabilities, you have the equity, right? That is what the equity certificate or the stock certificate represents, is your share of that company's capital. Now, no one in their right mind would ever want a quote unquote elastic stock certificate that some other shareholder could print new shares of and dilute you, right? That they could just arbitrarily increase their ownership in the business and simultaneously dilute your ownership interest in the company's capital stock. That would be nonsense. We would not tolerate that whatsoever. Yet in money, you could think of money as like a stock certificate in the share of global capital, right? It represents a fractional share of how much purchasing power you have. So how much power you can go out to purchase the goods and capital available in the global marketplace. If one quote unquote shareholder can print themselves new shares of money to enrich themselves and debase you, that is as asinine as having an elastic stock certificate. The one shareholder class can print themselves new shares and debase another. So it's to your point about being anti-capitalistic, it's nonsense, right? Like to have capitalism, you need ownership and strong private property rights. Printing money is a violation of private property rights.
That's like somebody coming and taking a part of your lotto away. You say,
exactly,
one third of this acre is mine now.
That's right.
So, and it's one of the reasons I don't buy stocks, because I've issued stocks. I'm a entrepreneur, and we printed them all the time. It was it was completely debasement. You know what I mean? We just printed more shares of stocks so we could sell more shares. It's legal. We do it legally. Please hear me.
Sure.
Legally. But I didn't like it.
But even when you did that, the dilution on the cap table was pro rata, which means every person that owned a percentage of that company was diluted proportionately.
Right.
What I'm saying with the printing of money is that it's not proportionate whatsoever. There's one group that's expanding their ownership and they're diluting another group. So central bank shareholders expand their purchasing power at the expense of savers or users of the currency.
Correct.
It's a totally rigged game.
So again, so that's my rich dad said, they're stealing our wealth via our money. Same Bucky Fuller said, they steal our wealth via our money.
That's right.
And there's another thing called the Cantillon Effect.
That's right.
That the closer you are to those who print the money, the richer you get. What is a Cantillon Effect?
It's exactly what I just described, actually. So those who receive the newly printed money first or earliest benefit at the expense of those who receive it later or last. So
Right.
as money enters broader circulation, prices start to increase, right? Goods and capital get bid up. So
Right.
those that are buying it at low prices before that money enters circulation and bids up prices are benefiting. They're increasing their capital position at the expense of those that receive it later. So this is a simple way of saying this. Money printing is one of the primary means by which the rich get richer and the poor get poorer. If
Amen.
99% of your balance sheet is assets, well, then those assets are being bid up and you're benefiting from price inflation to some extent. If 99 or 100% of your balance sheet is cash, or you're living paycheck to paycheck, or you live on fixed income, you are being victimized in this scheme. So it's a regressive tax on the poor, basically.
Yeah. So I just want to be clear. Rich Dad Poor Dad came out. I said the savers were losers. The rich don't work for money, and your house is not an asset, because all of it was designed to take your wealth from you, and that's why I stay away from it. So could you explain why you're so enthusiastic about Bitcoin? Because you get younger than me. Things like the halving, and now that's an ETF. What does it mean to you?
Yeah, I mean, you opened this show talking about the good news on money, and I would argue that there is no good news on money other than Bitcoin. And you also mentioned that you don't think you have enough Bitcoin, and I would say welcome to the club. There's not a Bitcoiner alive that doesn't think they don't have enough Bitcoin. We all want more because it is basically the ultimate form of ownership or the ultimate form of money that has ever existed. And then to your other point, we have this idea in Bitcoin that everyone gets Bitcoin at the price they deserve. So it's very complicated. It's hard to understand. You need to understand a little bit about a lot of things to really start to get your head around Bitcoin. And just take all this with a grain of salt and a dose of humility. Even those that have their head around Bitcoin still don't fully understand it. Like once you start to understand how the technology works, the implications are truly staggering and profound and hard to think through. But so what is it? I mean, if private property is the power for an owner to control an asset independent of anyone else's actions, right? That you can fully control an asset, then Bitcoin is the strongest form of private property that human beings have ever had.
And
It's
and and, and the reason I want to go into it is because we're talking before we came on with Jeff Booth.
mhm.
He's, there's a whole nother dimension to Bitcoin I never realized.
Yes.
And the thing I'm excited about is young guys like you who are already, I'm so old. I don't know what the web is, but you guys grew up in it. And from what I understand is young guys like you are going to take Bitcoin to a whole nother level. And I think that's what the old guys like me are saying. The government's going to come after you guys.
Yeah, and that's what Bitcoin's designed for. This is money wrapped in military grade encryption designed to be unstoppable. So there's no conceivable
Amen.
way to stop it. And to Jeff Booth's point about Bitcoin being much bigger than money, it's true. I think we're going to re architect the internet on top of Bitcoin. One of the things Bitcoin does is by being an unstoppable money, you can actually send messages on Bitcoin that are equally unstoppable. So it's going to be through Bitcoin and the higher layer protocols we build on it that we will have true free speech in the digital age. It will be the end of digital monopolies and censorship by virtue of having an unstoppable communications protocol built on top of Bitcoin. That's one of the most exciting dimensions of it.
And according
Um,
to Jeff, it gets more fair.
yes,
Right now, if you're not close to the Fed, you're not Janet Yellen's friend, you're out.
that's right.
So when we come back, and it's going way too fast, but we'll get into, I'm going to ask some questions that Jeff put in my head, Jeff Booth. and then you can yay or nay them on all this stuff. But I'm understanding a whole other dimensions to quote unquote money via Bitcoin is just the start. So we come back with Robert Breedlove. We're talking more about why Bitcoin, and we make no recommendations. We're not saying you should buy it or not buy it. I buy it, but why you should at least entertain it.
You should study it, I would argue.
What was that?
You should study Bitcoin.
Yes, that's what I've been doing, and the more I study it, the more actually confused I get. Mm-hmm. But it's a lot bigger than just Bitcoin.
Yes.
So I'll be right back.
Hi, everyone. I'm Kim Kiyosaki, co-host of the Rich Dad Radio Show. And I want to thank today's sponsor, our friends at Gold Alliance. You know, we should all be concerned about high inflation, a looming recession, the very troubled banking system, and out-of-control spending in Washington. And the fact is, during every major crisis in U.S. history, many of those who failed to prepare watched their savings, investments, and retirement funds plummet, while others with the foresight to own gold helped preserve their wealth and purchasing power. Now, we're facing several major crises at once, and we may soon face even more economic turmoil. So please don't wait. Consider gold and put yourself on the road to financial peace of mind. The new free 2023 Gold Guide from our friends at Gold Alliance can show you how. Just visit www.freegoldguide.com/Robert or call 1-800-473-4585. Republican governor and conservative commentator Mike Huckabee says Gold Alliance is the only gold provider he recommends to his friends and family. Please visit freegoldguide.com/Robert or call now at 1-800-473-4585. Thank you.
Your turn. Attend Robert's free virtual wealth building event. Claim your free access now at richdadfree.com. Don't wait, access is limited. Go to richdadfree.com. That's richdadfree.com.
Welcome back, Robert Kiyosaki. Good news and bad news about money and Bitcoin today. And today, one of my favorite guests is Robert Breedlove. Like I said, there's this whole new generations of money. There's old guys like me. My friend just asked me, how do I get on the web? I said, how would I know? I'm not getting on it. And then there's a whole other generation born into it. So the minds are different, and the neural pathways are wired differently. So Robert Breedlove is one of my favorite guys because he's classically trained in accounting and finance and things like this, but he's also a Bitcoin advocate. And we're talking about my friend Jeff Booth. I call Jeff Booth the new Bucky Fuller because my whole company, my whole team of people are studying Jeff Booth this coming Thursday, because what Jeff Booth is saying about Bitcoin is what Bucky Fuller would say about it. It's why you should own it for humanitarian reasons. And so I'll ship you the Jeff Booth part about that, where he's talking about the humanitarian aspects of Bitcoin. But meanwhile, we don't have enough time for that. So what do you say? Why would you say Bitcoin? Oh, what is halving? Explain that to me.
Yeah, sure. So I guess I'd first like to pay some homage to Mr. Bucky Fuller. I think he has a quote that says something like, if you want to improve the world, don't focus your energies on destroying the old, but rather focus your energies on creating the new. Something like that. I'm paraphrasing, but that is exactly what Bitcoiners are doing. Like, obviously we, some of us, like through my podcast, I try to shine light on central banking and the corruption of money. But most of the energies in the Bitcoin community are being devoted towards building an alternative system, one that has fair and equitable and unbreakable rules, right? This is the key thing, as we as human beings have to engage with one another through gameplay, right? Economics is a game, right? Money is the points we are scoring, basically. We want those who satisfy consumer wants, better, faster, cheaper, to get rich, right? They should score more points. What we don't want is people that steal from one another to get rich, because that incentivizes theft and coercion, et cetera. So Bitcoin, by virtue of being a money that's really hard to steal and impossible to inflate, like tilts the incentive landscape towards cooperation and away from coercion. So this is why it's a very massive ideal, right? It changes human behavior by changing the fundamental bedrock of incentives. Your question about the halving is important. So Bitcoin is produced via a process called mining. And by way of a simple analogy, you could think of this as like a lottery system, where basically you plug in a piece of equipment, an ASIC miner. This is an application specific integrated circuit. It's a mining machine. It does one thing and it mines Bitcoin. It participates in this global lottery. You put energy or electricity into that machine and it's casting lottery tickets, right? We call these hashes. These are basically guesses trying to solve the Bitcoin mining puzzle, which resolves itself every 10 minutes. And the winner of that global lottery is awarded the newly issued Bitcoin. Every 4 years, the Bitcoin algorithm cuts that new supply, that newly produced Bitcoin, in half. So every 10 minutes right now, it's 6.25 Bitcoin are produced every 10 minutes. I think it's about May this year. It's sort of a probabilistic date. Around May 2024, that amount of newly issued Bitcoin every 10 minutes will go down by 50%. So to 3.25 Bitcoin every 10 minutes. What this does is it cuts the natural selling pressure on Bitcoin by half. So Bitcoin miners are typically having to sell this Bitcoin that they are awarded to cover their operational and capital expenditures. However, when the newly issued Bitcoin is cut in half, that selling pressure is reduced by half. So if you hold demand constant, this is the magic of Bitcoin price number go up technology, as we say. Every 4 years, the natural selling pressure is reduced by half. So if demand is constant, this puts upward pressure on the price. And we tend to see new all-time high Bitcoin prices roughly 500 days after the halving. So expect to see a new Bitcoin all-time high price roughly 500 days after May 2024.
So, Robert, this is why I wanted to get into this with you. A lot of people get into Bitcoin to make money.
Mm-hmm.
You know what I mean? When the halving comes, right now, I think they're about $40,000 per coin.
Mm-hmm.
Not too many people have $40,000 lying around. They can just buy one.
Mm-hmm.
The halving comes, let's say it goes to 60,000. And I think this is what happens to old guys like me versus young guys like you. From what I understand from Jeff Booth, that halving actually makes Bitcoin more fair.
Mm-hmm.
More fair for everybody. Let me say that again. So even the price of Bitcoin is going up, according to people like Robert Breedlove and Jeff Booth and all this stuff, the younger generation, the price of Bitcoin going up is more fair than the price of gold going up or real estate going up or stocks going up. What do you say about that?
Yeah, I would first say I agree that it is obviously the Bitcoin price that draws in most people. That's how you hear about it typically, right? It's, this thing's all over the place. The price is way up, the price is way down. So most people come in for the volatility, right? They come in to try and make money, as you said. However, those that study Bitcoin tend to stick around because they want to remake the money. They start to see how problematic the current monetary paradigm is and how Bitcoin fixes so many things financially, ethically, etc., that they stick around. You become a Bitcoin advocate or a Bitcoin proponent because not only is it allowing you to advance your own personal interests by giving this very strong form of private property, but it's also letting you participate in this humanitarian movement, which is creating an alternative to central banking, which is the number one institution of theft and tyranny in the world today. Jeff's booth that each Bitcoin halving makes Bitcoin more fair. I think, I don't want to put words in his mouth, but I think what he's alluding to there is that people that hold Bitcoin, they tend to sell in bull markets, right? People that are way in the green will sell some of their stack for dollars during bull markets. In each bull market, we see Bitcoin become more widely distributed. So Bitcoin ownership becomes more widely distributed in bull markets. And then in bear markets, people go back into an accumulation phase. So I think that's probably what he's getting at. And that's not the same with other commodities, because in other commodities, as price increases, production increases. But as I said earlier with Bitcoin, It has a perfectly fixed supply. You cannot increase the production of Bitcoin. It always adheres to this fixed diminishing supply schedule that goes to zero in the year 2140.
Yeah.
So
If I may,
Bitcoin's the only asset in history where price does not influence the supply issuance, and that's a key point.
so let me ask people. This is the thing here. It's Jeff Booth saying Bitcoin makes the world better. Like I
Yes.
said, this Thursday I'm studying it,
Hmm.
and I think it's important everybody study it because right now my perception is, oh, I'm going to make a lot of money because there's scarcity. Do you know what I mean?
Yeah.
And there's a whole nother dimension to what Jeff's talking about. There's a whole nother level that younger entrepreneurs, basically young entrepreneurs like you guys, will become the new federal bank. You'll be building money on top of money, making more money for the rest of the world, rather than a centralized control of the bank. And I think that's what he's saying.
Well, so my perception of this would be that Bitcoin is a technology that enables capitalism, a more
Yes,
intensive form of capitalism.
yes,
So
yes.
any market economy that has a central bank, money is one half of every transaction. If that money is stealing from you, then at best you're 50% socialist, right? So we've never been anywhere near a free market, anywhere central banking has existed.
No.
But with
But
Bitcoin,
one more time, this Bitcoin betters the world. That's Jeff Booth.
yes,
I've
yes,
I've listened to this thing 8 times now, Robert, because I couldn't get it.
yeah.
How can the price going up make the
Well,
world better? I couldn't
well,
get it.
it's very simple, actually. And it's Bitcoin is all about putting an end to the stealing, right? It's
Yes,
a form of
yes,
property that's very hard to break. Again, it cannot be inflated. So central banking theft through money printing sort of goes away as people figure out, hey, I can store my purchasing power in Bitcoin and not get scammed by
yep.
inflation anymore. As
And
more
can I add
people
one more
figure that
thing?
out,
So that's why it's Grunch of Giants by Fuller 84. Our wealth is stolen via our money.
yes. And
So when
so,
the school teacher says, go to school, get a job, work hard, save money, and put your money into the stock market,
yes,
that's the scam.
that's right.
That's the scam.
And something I think you, Robert, can get behind as a longtime advocate of gold and detractor of state intervention. Everyone gets very excited about Bitcoin price go up, right? Obviously. But the other side of the coin is state power go down. So as Bitcoin price goes up, then coercion becomes less profitable, right? The state loses its grip, its ability to intervene in the affairs of individuals.
Correct,
So
correct.
that I think is the humanitarian dimension, right? There's obviously a self-interested capitalistic dimension. We want to preserve purchasing power off time. We want to get across time. We want to get rich, etc. But the flip side of that is you want that for everyone, right? We want a level playing field
Yes.
for all market participants to play on so that we can focus our energies on solving consumer wants better, faster, and cheaper rather than fighting with one another, right? Fighting and stealing and lying and killing. All of these things are anti-productive, right? They inhibit the game of economics. And Bitcoin tilts us away from those self-destructive activities and towards more cooperative and productive activities as a species.
And that's why guys like you, with your formalized training in accounting and finance and all that, you can see the game from the inside. The average
Sure.
person cannot.
Yeah.
And so they go to school, they get a job, said, well, how do we end poverty? Well, send them to school. I said, well, that's the problem. They go to school, they learn nothing.
The
You know, so
school,
what,
yeah.
so what Jeff and you guys, the younger guys, are saying is, I'm honored to be talking to both you and Jeff and a whole bunch of other guys. They see Bitcoin for what it is. It's not about getting rich. It's about making money more fair for more people throughout the world.
That's right.
So,
And you mentioned equality, right? And this is a tricky word. So equality of outcome doesn't exist, right? Humans are only equal in the grave, basically. Obviously, we don't want that. Equality of opportunity also doesn't exist. We're all born in different places, different times, different genes, different skills, different life paths, etc. Equality of opportunity would only exist in the matrix, right? Where we're all test tube babies acting like batteries. The only equality that actually matters is equality in the eyes of the law. Again, this idea of a level playing field, fair rules. You know this, right? Any game you play, that everyone plays by the rules. If someone doesn't play by the rules, they're a cheater, right? They become outcast. Yet in the game of economics, we don't have that. We have social institutions that favor insiders and disfavor outsiders,
Correct.
specifically the central bank. And so Bitcoin is the embodiment of that idea, right? All humans are actually equal in the eyes of Bitcoin. It doesn't matter your race, creed, color. It doesn't matter. It's totally agnostic to human affairs. It just does what it does. New block every 10 minutes, supply cap of 21 million. And it doesn't care who uses it, how they use it. It's just a fair, equitable economic system. And that is very crucial for human beings.
This is my final question. Okay, so today it's about 40,000 a coin.
Mm-hmm.
How does Joe Schmo, my yard guy, who's making 15 an hour, how does he afford a coin?
Bitcoin is divisible into 100 million subunits called Satoshis. So you can buy 1/100 millionth of a Bitcoin. So
how to do that, Robert?
Well, you can sign on with any number of Bitcoin exchanges. It's also becoming, now with the ETFs, you can access it through your brokerage accounts. It's just becoming more and more mainstream. But typically, depending where you live in the world, you look up a Bitcoin exchange, or if you have an existing brokerage account, you could look at the Bitcoin ETF. If you have any account that trades stocks, you can buy something like MicroStrategy, which is basically a proxy for Bitcoin at this point. So there's more and more ways to access it for investors, and you don't need to own a whole coin. You can own a fraction.
So you don't need $40,000.
That's correct.
So what is a Satoshi? I'm Japanese. I don't know.
1/100 millionth of a Bitcoin. So every Bitcoin divided by 100 million. Every Bitcoin equals 100 million sats or Satoshis. And Satoshi is paying homage to the name of the inventor of Bitcoin, who is Satoshi Nakamoto.
Who do you think he is, or was, or?
I have no idea.
For real?
The best theory I've heard is that it was a collaboration between Hal Finney and Nick Szabo, and sort of makes sense. Some of the writings of Satoshi have been compared to Nick Szabo, said like it's sort of like his writing style.
Who's Szabo?
Nick Szabo is a cypherpunk and computer scientist, not mentioned in the white paper, but a lot of the projects he worked on were sort of predecessors to Bitcoin. There were many, many attempts at anonymous digital cybercash prior to Bitcoin, like 30 years of attempts before Satoshi put the right pieces together. I really have no idea. It's pure speculation. And the best thing Satoshi ever did for us was disappearing, because he cemented the decentralization narrative of Bitcoin.
So, Robert, I enjoy talking to younger guys like you. I mean, you guys are give me a hope for the future, as compared to our Fed chairman and Treasury Secretary and all these characters who are my age, all the boomers, man. Well, we screwed it up big time. But anyway, thank you, my friend. Let's stay in touch.
Thank you, Robert. Thank you for having me.
The word. Thank you. So we come back with final words from the Rich Dad Radio Show. We'll be right back. Thank you. Thank you, Robert Breedlove. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show. Good news and bad news about money. Many thanks to Robert Breedlove. He's been a friend of the channel now for about 4 or 5 years. And he's my go-to. He's one of my go-to guys with Jeff Booth and a bunch of others, Mark Moss, on Bitcoin, because as an old guy, I don't know much about it. One more thing is we are an educational company. We do not make recommendations what you should buy or invest. But for total disclosure, I own several, 60-something, not very many coins, but I'm glad I bought them when I bought them. And I had no idea why I bought them. I just bought them because everybody else was buying them. But I think it's best said that somebody once said, you can buy a Satoshi or a stash, whatever they are. They're ETFs now. I'm not recommending it, but I'm saying that you might want to consider owning some of it. And the reason is because fiat currency, which the US dollar is, and the pound and the peso and the yen and the euro, they're all in trouble right now. Our debt is too high. So you may want to consider owning at least one Satoshi. Thanks very much. Thanks for watching the Rich Dad Radio program. Make it a good world.
This podcast is a presentation of Rich Dad Media Network.